Welcome back to another episode of the Home Loans Network podcast. I am your host, Ebony Biko, the president and founder of Home Loans Network, powered by Marty and your mortgage strategist. With more than 25 years of experience in real estate mortgages and helping individuals become homeowners and real estate investors, my goal is to give you the information that is clear, practical, and easy for you to understand, so you can actually make a confident decision throughout your home buying journey or real estate investing journey. So today, we're going to dive into one of the most common and most confusing and most misunderstood topics in the mortgage industry, and that is down payment assistance. I'm going to break down how these programs actually work, whether you can apply on your own, which lenders participate, how some buyers really do purchase homes with little to no money out of pocket. And if you're a real estate investor, I have another podcast coming up for you that you must listen to. But this is for my home buyers who's looking to purchase that home right now with little to no money out of pocket. I'll also answer the top questions home buyers always ask me about down payment assistance programs and share some real examples of how people use these programs successfully. This episode will give you the clarity and directions that you need. So let's get started. How down payment assistance works. Down payment assistance, or DPA, refers to financial programs designed to help buyers cover their upfront costs, mainly the down payment closing costs, and sometimes even prepaid taxes as well as insurance. Many buyers can't afford the monthly payment, but for whatever reason, life happens. They struggle to come up with thousands of dollars for the down payment. But see, that's where the down payment assistance program steps in at. Most of these programs fall into three different categories. First, you have the grants, which are truly free money if you meet the program requirements. Then you have what we call the forgivable second mortgages, meaning the assistance gradually disappear over time, often over 3 to 5 years, sometimes even 10 years. It just depends. Then there is the deferred or low interest loans, which you repay later, typically when you refinance or you sell your home. So for an example, in Illinois, I recently actually helped a buyer receive $7,500 through a deferred DPA program. They didn't owe any monthly payments on that particular money that they got, and it stayed on the home until they refinance or sells it. Now, that $7,500 went directly towards their down payment. The money they did not even have to save up or even come up with on their own, or didn't have to get a gift from anybody. This was money that they were able to use towards the down payment of their home. Now, if you would like to, before I even go started, but if you would like to explore DPA programs available in your area or even just check your eligibility, you can also visit www.downpaymentloanassistance.com. And I'll make sure that I have a link in the description of this podcast. But again, that's downpaymentloanassistance.com. This is actually a great tool to learn about programs in your state and compare options and just really to see if you qualify. So I'm going to tell you one of the biggest misconceptions that people ask all the time. Can any lender use down payment assistance? So one of the biggest misconceptions is thinking you can get approved with any lender and then apply for a down payment assistance program separately. Unfortunately, most programs do not work that way. Nearly all DPA programs require you to work with a lender who is approved and trained for that specific programs. And so just keep in mind, there's a lot of different DPA programs that are out there. And some of them are state specific, government specific, or non-for-profit organizations are giving these different programs. So again, you have to qualify for the program, but then the lender has to be approved and trained on that specific program. These lenders must follow strict guidelines. You must submit your documentation through their program's portal and reserve your funds. If a lender is not on that approved list, they cannot access the money, even if you do qualify. So it's really important that you work with a mortgage broker who knows who are on approved lists and who can work with actual lenders who are working with these DPA programs. So for an example, with IHDA programs in Illinois, which we call IDA, such as we have the assets forgivable, assets deferred, and opening doors. Only IDA approved lenders can submit your down payment assistance application. So if you're working with a lender who doesn't participate, you won't even be able to use that program. So you can have an approval, right? A pre-approval for this house that you went to go see, that you put an offer on. But where are you going to get that down payment from if you were not blessed to have the money saved up, or you don't have anybody that can actually give you a true legitimate gift that is non-repayable? Because that is what a lender is going to ask for if you're using gift funds. Now, can you apply for a down payment assistance program by yourself? Some buyers actually assume they can apply for a DPA online the way you would apply for a scholarship or a grant. Unfortunately, but the truth is, DPA programs must be applied for by your lender, not your broker. And honestly, that's where someone like me comes in at, because I'm going to tell you which lenders to go through, and then I will help you with their process to make sure that you get approved for that program. Even if you're not working with someone like me, being educated on how this works is extremely powerful, because then that will save you time, headache, stress of working with anybody to get a pre-approval, to be happy to go see a house, to put an offer on that unfortunately you may not even be able to purchase. Now, there are a few exceptions. Usually, city or county grants that allow homeowners to apply directly. But even in those cases, your lender must accept the funds and structure your loan around the program rules. Not every lender is willing or even able to do that. A good example is the CHA $20,000 home ownership grant here in Chicago. Buyers apply directly through CHA, but they still need a participating lender who understands CHA's guidelines. So even with the direct application programs, the lender will still play a major role in that. Can you get a pre-approval with one lender and use a DPA from another source? That is another question that I get often. This is a very good question that I hear almost every single week. The short answer to this is no. The lender who handles your mortgage must be the same lender who handles your DPA. Your down payment assistance affects your loan structure, the underwriting, debt to income ratios, closing timeline, and more. It's all interconnected. It all goes hand in hand as part of the puzzle. You cannot mix a pre-approval from one lender with the DPA from a program tied to another lender. The lender and the down payment assistance programs absolutely must match. Now, I want to talk about another common question that I get when it comes to DPA and buying with little to no money. How can it work together? Is it possible? Now let's talk about that question. I hear most often from homeowners who want to use down payment assistance and are trying to buy a home with little to no money. Can I really buy a home with little to no money and out-of-pocket expenses? Yes, you absolutely can. Now, I will tell you this. Your credit reports you usually need to pay up front. Your appraisal you need to pay up front. I mean, you should have some type of skin in the game. Understand that. And your earnest money, which is the down payment towards the realtor, and that is also the down payment for the realtor, that seller usually kind of have a say as to how much they want you to put down. It might be $1,000, it might be $5,000. And to be honest with you, the more the down payment that you put down, it shows that you're a serious buyer. So if you have other people competing for that particular property, that earnest money that you put down higher, yours might get approved. You know, your offer might get accepted. So just take that into consideration. So there are some upfront out-of-pocket expenses that you will have to occur in the door. I just want to kind of nip that in the bud and say that right now. But yes, absolutely. Many buyers do this, right? When it comes to being able to come out of pocket for strictly just that and don't have to pay anything else, because everything, like I said, coincides with each other. I have had clients who purchase homes using down payment assistance to cover their down payment while the seller credits cover their closing costs, right? One buyer in Chicago purchased a single family home and walked away with just under $2,000 out of pocket expenses. I've had some that walked away with no out of pocket expenses except for the ones that I actually mentioned earlier. And most of that was the inspection and appraisal fees that they had to pay at closing, because sometimes you can pay the appraisal at closing and the inspection fee can be paid out of closing, right? Another client used a DPA plus negotiated a seller's credit and received their earnest money back at closing. So that's another thing. If the seller is willing to contribute 3% towards the closing costs, or whatever the maximum allowed towards the closing costs, understand, and you got your DPA, you more than likely may actually get some of your money back. And when I say some of your money back, the money that you initially put down, which was that appraisal money, that the credit report money. But no, are you going to go to the closing like way back in the day and get money back at closing like that? And when I say back in the day, it's a whole nother story. Absolutely not. You're not going to closing as a buyer to make money. You're going to closing as a buyer to close on your home that you dreamed of, that you've been searching for, that you worked hard to get. So just remember that. But if you want to be in a situation where you're kind of going to closing and coming out of pocket with little to no expenses, that down payment assistance program is going to help you along with seller's credit. And if you do that with the seller's credit and the down payment assistance, trust me, you will be in great hands. If you're working with a realtor who knows how to negotiate a seller's credit, and you're working with a mortgage broker who knows how to help you get your down payment assistance and work in conjunction with the lender that's going to give you that loan, then that is a sure win for you. And this is why I'm here, to make sure that you are doing the right thing. Now, do I have to still pay for things like an appraisal and inspection? I get that a lot. Yes, you still have to show you have some skin in the game. Typically, you pay for the appraisal and inspection up front. However, like I said, there are those moments whereas you can get credited back at closing. Again, if the deal is structured correctly with the seller's concessions and lender's credit. So seller's concessions is also considered seller's contributions, okay? Contributions towards the closing costs, seller's credit. So those are other names that you may actually hear. And those are names that you need to understand. Seller's concessions, seller's credits. Understand those terms. Because again, when you are with a realtor and you're offering $400,000 on this property, $600,000 on this property, $250,000 on this property, understand you want to let your realtor know, hey, I need the seller to contribute towards my closing costs. And that's what you're going to say. Ask the seller, is they going to contribute towards my closing costs? So I want to write this offer up at $350,000 with asking the seller to contribute 3% towards my closing costs. And then from that point, it needs to be a negotiation. But don't ever think that you have to put an offer on a property and then a seller is not going to contribute towards the closing costs. And whatever you put that offer as, understand that realtor that you're working with must submit your offer as what you said, not what they think the seller is not going to allow. Remember that. Take note of that. Does using down payment assistance slow down the loan process? Now, it actually can. It depends. Now, but when it's done correctly, you're fine. The only time the DPA causes delays is when a buyer submits documents late or when they work with a lender who rarely handles these programs. When you work with a lender who specializes in DPA, who knows the guidelines, and who reserves the funds early, the process moves smoothly. Remember, the down payment assistance program, in order to get these funds, they have to be reserved. So it's not like they are just the bank just have it just to give it to you. No, because these are special programs and the money is not coming directly from the bank. It's coming from money that was set aside for the purpose of assisting homeowners with down payment assistance. Can I use down payment assistance to buy a duplex or a multifamily property? You absolutely can. Yes, you can, as long as you live in one of those units. So if it's a 2-unit, you must live in one of the floors. If it's a 4-unit, you must live on one of the floors. You cannot be a real estate investor trying to use a down payment assistance program because, again, this money is reserved for someone who needs the assistance, who really want this dream home for them. Okay? DPA can be a powerful tool to purchase a 2-unit or 3-unit property. I have actually helped so many clients use the down payment assistance to buy a duplex where the rent from their tenant is paying rent on one floor. They're living on, the owner and buyer is living on the other floor. But the thing is, the cool thing about that is the tenant that you have is actually paying your mortgage, right? So that's like really cool. Now, what this does is it actually helps reduces their net mortgage payment. And when this happens, your DTI, if you decide you want to become now a real estate investor or landlord and buy more properties, your DTI is actually low because instead of you paying $2,200 a month, now it's like you're paying $900 a month. So that's because your tenant is covering the other part, if not covering all of it. This is how most first-time home buyers really start building wealth. And I have taught classes on that. Do I have to stay in the house for a certain amount of years? It depends on the program. Like I mentioned earlier, there are some programs that's 2 years, 3 years, 5 years, 10 years. It really depends on the program. Some grants programs requires anywhere from 3 years to 10 years of occupancy. Forgivable loans often forgive a percentage each year. Deferred loans may not have a long-term occupancy requirement. Always understand your programs and the rules up front. Now, I'm going to do a whole segment on this right here, this hot topic question, how to buy a home with minimum money down. But right now, I'm going to just talk about it real briefly. If your goal is to bring as little money to the closing table as possible, here is my strategy for you. Number 1, you want to identify a DPA program you qualify for based on your income, credit score, property type, and location. Number 2, you want to combine the DPA with seller credits to cover closing costs and prepaid taxes and insurance. Number 3, use lender's credits if available to reduce any remaining costs. Number 4, you want to choose a lender who understands how to structure these programs together the right way. When all of these pieces are layered correctly and this puzzle is put together properly, many buyers get into the homes that they want with limited to no cash. It's totally how you structure it. And if you listen to what I say, that's going to wrap up today's episode. I hope this gives you a better and deeper understanding of down payment assistance, how you can use these programs to buy a home with less money or no money down, and you get what you're looking for. So if you thought that it wasn't possible, I'm telling you today, it is possible. If you're ready to see which DPA programs you qualify for, you can reach out to me directly at 312-392-0664, or just visit my website, homeloansnetwork.com, and I will schedule a one-on-one with me or do a pre-approval. And for those of you who want to explore the different down payment assistance programs on your own and in your area, compare the options in your state, or take a quick eligibility quiz, head over to downpaymentloanassistance.com. Again, it's downpaymentloanassistance.com, It is a great resource and tool for you to understand the programs that are available in your area. Don't forget, whatever you do, every Wednesday at 7 p.m. Central Standard Time, I go live on YouTube for Wind Down Wednesdays, where I answer your mortgage and real estate questions in real time. Subscribe to my channel at Home Loans Network. Thank you for listening. Thank you for sharing this podcast, because I know you're going to share it. If you don't, I want you to share it, because sharing is caring. And thank you for trusting me to guide you on your path to home ownership. I'll see you in the next episode.